This week on Talking Real, we discuss mortgage forbearance and other mortgage-related relief in the CARES Act that was passed by Congress to tell you everything you need to know about what kind of relief is available for people in need during this difficult time.
So let's explore some of those options on this episode of Talking Real.
Welcome back to Talking Real, brought to you by the Oklahoma Association of Realtors. You are tuned into episode 114 of Talking Real, and you're joined by your hosts, Jeff and Nabil. And Nabil, how's your day going?
Day's going well. I am, it's another week at home, but I'm happy that the weather is supporting enough to be able to sit outside and get some vitamin D while I get some work done.
Absolutely. It's important to get out of the house. I know I've got a little bit of a cooped up feeling, and getting out, going for a walk, getting some fresh air is vitally important. So make sure you're getting out there and walking because, we're still, quarantined at home during the COVID-19 outbreak that's going on. But we still want to keep bringing you good content here on Talking Real. And we also hope that this week we're bringing you better audio quality, because I didn't realize how bad the audio quality was when we're at home recording with just what we have. So we have upgraded our microphones a little bit. And so hopefully this week will sound a little bit better and a little bit more pleasing for the content that we're bringing you this week.
Yes, for sure. Hey, I never sounded bad. I don't know what you're talking about.
You're right. It was just me.
No, I'm just kidding.
I sounded terrible. And
I actually ran up to the office when no one was there to grab a microphone.
Yeah, I did. I had to order one. I'm just out of luck. Had to order one. So that's all right. So we're going to keep bringing you Talking Real episodes every week. And again, still working on figuring out what kind of valuable content we can bring you right now during the COVID-19 outbreak. We feel like it's an important time to focus on those issues. And so we want to keep bringing you what you need to know right now that can help you with your job, help you answer questions for clients, those kinds of things.
Yeah, because even in these times, or especially in these times, clients would be looking to you to know, what their options are, what they can do. So I think it's very important to stay aware and just know everything that's happening. Absolutely.
Because they're going to look to you to be that voice of real estate, that expert on real estate related issues. And so we want to make sure we give you all the information that you need. This week, I've had this come up a couple of times. People are asking questions on the legal line, those kinds of things. And there's been a lot of discussion on Facebook, some articles out there on what is the mortgage relief that's available in the CARES Act, which was the federal legislation that was passed. That's the $2.2 trillion stimulus bill. And Nabil, what did CARES stand for? I think you were telling me earlier what it stands for. I couldn't remember what it was.
It stands for the Coronavirus Aid, Relief, and Economic Security Act.
There you go.
So if someone cares,
always got a good acronym.
That's what it stands for.
Yes. Yes, exactly. So this week we wanted to talk about what kind of stimulus or relief is available in the mortgage industry. And primarily what we're talking about is mortgage forbearance. And when we say forbearance, what we mean is a temporary pause or reduction in your mortgage payments. It's not a mortgage forgiveness. It's not a waiver of those monthly payments. It's simply saying we're going to pause your payments so you don't have to pay for a certain period of time, or we'll reduce them by some agreed amount for a period of time. But then at the end of that time, you're going to owe the money. Now, there's different ways to do that. We'll talk about that. But that's what we're talking about. You're still going to owe the money. It's still going to accrue interest, those kinds of things. But there may be a period where you can stop paying or reduce the amount that are paid on a monthly basis for a temporary period until such time as, that forbearance ends. So that's what we're talking about when we talk about mortgage forbearance that's available in this CARES Act.
Right. And I think that's key. It's not forgiven. It'll still be there when we get through this period of hardships. But there are a couple important things to know before we get into all of this. They recommend if you can pay your mortgage, that you still do. Don't call your mortgage servicer if you aren't facing an immediate issue, just because, they're getting a lot of calls and they're a little overwhelmed right now. So you might not get the answers that you're looking for if you call them if you don't have an immediate need. But if you do have an immediate need, then you go ahead and call them because you need to figure this out. But just be prepared to maybe wait a little bit because they are experiencing a really high call volume.
Yep, absolutely. I think that's a great point, that if you may have a need, but it's down the line, start by looking on the website of your loan servicer or your mortgage lender to see what resources they have available there. There may be an electronic request that you can submit as opposed to calling, because there's a huge call volume right now. Again, in the first 2 weeks of major unemployment claims, there were 10 million people that were making unemployment claims. So there's a significant number of people that are going to be looking at these mortgage options as well. Mm-hmm. So they're calling in to their mortgage provider, and it's a significant wait time. They just don't have the employees to be able to answer everybody's calls immediately. So just understand, if your need is immediate, then absolutely call and begin working out what kind of relief you may be able to get.
Right. And there are a bunch of great resources that are available online that might be able to answer your questions if it's not an immediate need. And we obviously did a bunch of research before talking about this topic. And the article that we're following is from the Consumer Financial Protection Bureau. So we will link to this in the show notes in case you want to go hop on there and check it out as well.
Absolutely. This is a fantastic resource. Of course, we hope we're bringing you valuable discussion on it here, but then there's additional information in that article, or if you've got friends, family, or clients that need this information, go ahead and send them a copy of this article, because it's going to tell them what kind of stuff may be available and how they need to, how to go about requesting this kind of relief.
Right. So the CARES Act puts in two protections for homeowners. Right, one of them is a foreclosure moratorium, and the other one is the right to forbearance for homeowners that are experiencing a financial hardship.
Yes. So I think, first of all, again, we briefly explained what mortgage forbearance is, and it does create a right for certain people, certain types of loans is what I'll say. And then the second one is the moratoriums. And again, this just basically puts a pause on a mortgage lender from being able to start foreclosure proceedings. So I think the first thing is to start out talking about, well, what options do you qualify for, right? So depending on who your loan is through, that will change what either you're entitled to or what you can ask for, and how some sort of mortgage relief will work. Because the first thing you need to know is who services your mortgage and who you need to contact. I mean, step one is just, who am I dealing with?
Right.
Because you have different types of mortgages and loans, right? You may have a lender who services their own mortgage. You may have a lender who outsources that to some other company who you actually make the payments to and deal with. And some of them are going to be backed by the federal government. Some of them aren't. And so depending on all those factors, step one is you just need to find out who owns or services your mortgage, which of course the best way to do that is if you get monthly statements from your mortgage lender. I mean, that's going to have the information on who you need to call. So step one is to do that and figure out who it is. There's also some other ways to find out who your mortgage servicer is. And this article has a link to some resources on how you can track that information down if you're not sure. Right. So that's step one, is who are you even dealing with?
And I think that's step one and the key, because if your mortgage is federally backed, then you are qualified for forbearance. If it's not federally backed,
correct,
then it's completely at the discretion of the institution that is issuing that mortgage.
Right. And I think this is one of the biggest pieces where there's a lot of confusion because different people are calling their mortgage servicer and getting different answers. So about 70% of mortgage loans out there are backed by the federal government. And when we talk about backed by the federal government, we're talking about mortgages that are backed by the Department of Housing and Urban Development, the Department of Agriculture, FHA loans, Veterans Affairs loans, and any loans that are backed by Fannie Mae or Freddie Mac. That's what we're talking about when we say, federally backed loans, because there are different agencies for different types of loans. And again, this may be done in the aftermarket, right? They may have been sold to a federal agency that's backing them, or it may have originated being federally backed. But the bottom line is you need to know if your mortgage is federally backed, because if it is, then all these provisions in the CARES Act apply. Mm-hmm. They don't have a choice. They have to grant you forbearance and foreclosure moratoriums. If you fall within the 30% that are not federally backed, then it completely comes down to whatever that particular lender is doing and how they want to handle it. So it's important to know when we talk about these types of mortgage relief that are available, it's specific to federally backed mortgages, not necessarily non-federally backed mortgages. Those are just going to be completely whatever arrangement you can come up with between the borrower and the lender in that case.
Right. So let's assume that the loan is federally backed and you qualify for some mortgage assistance or mortgage relief. What are your options?
So the first thing is that if it's federally backed, then right now, the lender or loan servicer cannot foreclose on anyone for 60 days starting March 18th. This prohibits lenders and servicers from starting any kind of judicial or non-judicial foreclosure proceedings or from finalizing any foreclosure that exists right now. So they, even if they've already got a foreclosure done, but they haven't gone to a forced sale of the property, they're still under 60-day moratorium. So for any of those federally backed mortgages, you've got 60 days starting March 18th that they can't do anything. No new proceedings, can't continue existing proceedings. But the second thing, for those that aren't already dealing with a foreclosure, then the next thing you have is if you're experiencing financial hardship due to the pandemic, then they're required to grant you 180 days forbearance just requesting it. And it's important to know they haven't said how you request it. It doesn't necessarily say that it has to be in writing. It just says that upon request by the borrower, they shall give you 180 days. And then if you still need it at the end of 180 days, then it says that they shall give you another 180-day extension. So you could potentially have basically an entire year of mortgage forbearance just by requesting it. Mm-hmm. But to do this, you do have to contact your loan servicer. So that's where we go back to the beginning of you need to know who your loan servicer is, and you need to contact them and ask them, how can you request this forbearance if you need it? And again, it'll start out at 180 days, and then there's an additional 180-day provision. And again, if it's federally backed, they don't really have an option. They have to give it to you if you request it. And during that forbearance time, there aren't any additional fees, penalties, or extra interest beyond what's already scheduled. So it's still going to accrue interest like normal, but they can't charge you late fees. They can't charge you any kind of penalties or any sort of extra assessment because you're doing a forbearance. So that's kind of good to know as well, that it's not going to overly penalize you during the time that it's under forbearance if you do request that.
Right. So, but again, it's not forgiveness. These interests and the payments will still accrue. You just won't be charged anything in addition to what the regular payments would have been, or what has been forbeared for the future.
Right. Absolutely. So it does provide some protections there, but I think one of the things that is sort of problematic is what happens on the back end. And that's where there's also been a lot of confusion, because if you're asking for forbearance, the important thing too here is that you need to work out what exactly the forbearance is, because there's different types of forbearance. And one option is simply just to have a payment reduction. Okay, so it's not necessarily a complete pause on everything. So maybe your income was drastically reduced, but you can still pay something. Mm-hmm. So maybe I can't pay $1,000 a month, but I can pay $500 a month. So you're going to work out a deal that says, can we reduce my payments by $500 a month for 180 days? Okay, so that's one option. The second option is basically completely pausing your payments. So that may be, again, I can't pay at all. So for 180 days, you just don't have to pay anything. But you have to think about what's going to happen at the end of that 180 days. And this is where it can get really complicated. And you have to be very clear with your lender about whatever the plan is. Because the first option is that what they'll do is they'll just take those payments and put them on the back end of the mortgage. So, if it was January of 2040 that you would have paid off your mortgage, well, you push it back 6 months. And so now you're June or July. So just tax it on to the end of your mortgage. But the other option, and I think this is what people are being told by a number of service providers, is we'll give you a forbearance, but as soon as it's over, every one of those payments becomes immediately as soon as you're done with forbearance. So if you put a 6-month hold on your mortgage payments, if you haven't specified, and haven't had an agreement with your lender that those payments are going to go on the back end of the mortgage, it could mean that at the end of 6 months, all of a sudden you now owe 6 months of payments immediately plus that current month. So it's like you owe 7 months of payments immediately, mm-hmm. which is probably, if you're needing forbearance, you're not going to be able to pay 7 months out of the blue, right? So this is where there are some people that are very confused about what is happening with the forbearance, because they're contacting their lender and they're saying, yeah, we'll give you 180 days. And then at the end of that 180 days, all payments are due immediately. And so that's a very drastic financial hardship that people are going to have to figure out how they're going to deal with that if they're in that situation of needing forbearance.
Right.
So you need to have that conversation with your servicer about what is the specific plan we're talking about here.
Right. And the thing is, there's nothing that's dictated that lets them go a certain way. It is completely up to the provider or the servicer to determine whether these get tacked on, like you were saying, to the back end, which would probably be an ideal circumstance, or if they are due right as soon as the forbearance period ends. The CARES Act does not dictate how they should deal with that. It just says you are eligible for forbearance, and then whatever happens after that is up to the provider.
Absolutely. So this is where it's important that when you have that phone call with your loan servicer, first of all, just figuring out what options are available that would allow you to reduce or suspend payments or whatever the case is. And then to ask, how does that, what happens in the end? You need to specify that if we do a 180-day forbearance, what are we going to do when that 180 days is over? What happens with the payments that were under the forbearance? Also need to covering late fees, those kinds of things. Again, if they're federally backed, they can't charge you late fees during the period of forbearance. But if it's non-federally backed and they're still going to do a forbearance, still need to make it clear, are they waiving any fees or anything like that? Because the non-federally backed mortgages aren't necessarily required to do that. Mm-hmm. The other option to consider is there some sort of loan modification or other options, right? So forbearance is, they're required to give you that forbearance if it's federally backed, but there may be some other loan modification options. So don't just stop at forbearance. Say figure out what all your options are. What's the whole sphere of everything that might be available to you that can help get through this period. So that's important as well, to explore additional options outside of just forbearance.
Right. And then once you've reached a decision or an agreement once you've evaluated your options and you pick one and your servicer agrees to it, I think the most important part is to get all of that in writing. Because this might have been over phone calls, a couple emails might have been exchanged with some options, but once you have settled on one and both parties have agreed to it, and I think the lawyer in you would 100% agree with this, is get that in writing, even if it's an email or, just something that says, all right, this is your option, this is what you've picked, and this is what we'll do.
Absolutely. I 100% agree. We've seen in prior mortgage crisis situations and things. I mean, you can't rely on them to do everything that's necessary or to know what's going on. Again, this is such a dramatic shift in the marketplace. And so you have to make sure you are dotting all I's and crossing all T's, making sure that you have documentation, keeping everything written, keeping notes written at the time you're making phone calls. If you're calling in and you're talking to Steve from ABC Mortgage, you need to write down who you're talking to and when you talk to him and those kinds of things. And then when you have that agreement in place, having it in writing is absolutely important. Absolutely. Because worst case scenario, they're not going to know what they agreed to. And if they start a foreclosure or something like that, then you're going to have that documentation on hand to help support yourself if in a worst case scenario. So absolutely get it in writing and keep lots of notes while you're going through that process.
Right. And it's not like there's anything malicious going on. Steve might have just had a really ridiculous day and forgot to keep accurate notes.
Absolutely. There's a million explanations as to why something goes wrong, but just know that it's guaranteed that this is going to go wrong for some people, right? When all we're through this and they're trying to, get people off forbearances and those kinds of things, there are going to be problems. Just guaranteed. There's too much of this. It's too busy. The volume is too high. Something's going to get lost in the shuffle. And so doing what you can to protect yourself on that is really important. Along the same lines, make sure that you're keeping track of your mortgage statements as they're coming in, keeping tabs on those, that it reflects what the agreement is, keeping an eye on your credit score, because one of the things is if you are one of these federally backed mortgages and you have a forbearance, they are prohibited from reporting you to a credit bureau as being late on your payments. They have to show that you're current. So if you don't have some sort of credit tracking service through a credit card or something like that, consider how you can keep an eye on your credit report so that they're not reporting you as, being late or something along those lines. And again, just figuring out what that looks like at the end of the mortgage payment, right? Or, you can always cancel your forbearance early. So if you lost a job and you got 180-day forbearance, but 90 days into it, you got a new job and your income is restored or something along those lines, by all means, call your mortgage servicer and cancel the forbearance and get back on payments. That's certainly a good strategy to be looking forward to once you have that income restored. So, it's a difficult thing, but again, making sure you're documenting it and knowing exactly what your options are is really, really important.
For sure. And, this is something that we've talked about in previous episodes. Always beware of scams.
Yep.
Things like this are, unfortunately, that's the reality of things these days. There's a lot of scams and there's a lot of fake emails that might come through or documents or things like that. So, just pay extra attention to things that are being said and things that you're agreeing to and who you're agreeing to it with.
Absolutely. I always got to watch out for, in difficult times, people will try to take advantage of other people. So certainly be cautious of that. Because there's a variety of scams out there. The CFPB here, they have a section on some different types of scams to be on the lookout for, as well as a link to other coronavirus-related scams. So take a look at that too and make sure people are staying protected there and don't become a victim when they're already in a difficult situation.
Right.
So we hope that gives everybody a little bit better perspective on exactly what the mortgage relief situation is. Again, if it's federally backed, you can get the 180-day forbearance plus an additional 180 days. They can't do any foreclosures for 60 days. They can't report you during the forbearance to the credit reporting bureaus, and they can't charge any additional fees or late fees or anything like that. If it's not federally backed, then it's just kind of up to you and the lender to determine what options are available. And regardless of whether it's federally backed or not, you need to know exactly what's going to happen at the end of that forbearance period with the payments. Is it going to go on the back of the mortgage, or is it going to become due immediately? And make sure you get it in writing. I think that's as summarized as I can make it right there.
I think so.
So if you guys have other questions related to, the CARES Act, any kind of relief that's available, or any other COVID-19 related issues that apply to real estate, please let us know how we can help answer those questions. Send us an email to podcast@okrealtors.com if you've got some sort of issue you'd like us to talk about in the coming weeks while we're still quarantined away and social distancing and trying to bring you all the information we can to help make your job a little bit easier or to increase that knowledge a little bit if you or clients have questions about what's going on out there.
And talking about increasing knowledge and answering questions, share this podcast with fellow realtors, clients that might find this information helpful, just so that we can spread accurate information to the people who need it.
Absolutely. So we appreciate you joining us every week here on Talking Real, especially during this difficult time. We hope everybody out there is staying well. Again, make sure you're taking a look at the resources we've provided. You can find all those at okrealtors.com/coronavirus. There's also a great page that NAR's put out at nar.realtor/coronavirus. And also check with your local association to see if they have any resources available as well. We're going to continue to update that and make sure you're looking at the emails that are coming out from us and everything else so that we can keep all the important information right in front of you as soon as you need it.
Indeed.
So until next time, we'll see you next Tuesday on Talking Real.